UOB says the Philippine peso is receiving support from the Bangko Sentral and Pilipinas tightening bias and its commitment to price stability. The BSP tightening bias angle matters because the peso story is about policy credibility as much as spot currency movement. The tension is whether BSP policy bias turns into a durable change or simply a sharp data point. That is why the first read should stay close to the confirmed numbers: 6.5% benchmark, 3.2% PHP gain, and the immediate checkpoint around 2 to 4% target. For a market structure story, the useful readout is how capital, liquidity, rates, or risk appetite changes after the first move. The reason to keep watching is that the next checkpoint can change the meaning of the first move. The confirmed frame is that the BSP raised its benchmark rate to 6.5% in 2024 after inflation pressure, with guidance suggesting readiness to tighten if inflation stays above target. The key baseline details are UOB view and carry trades, which give the story scale without requiring speculation. This scene grounds the viewer before the mechanism takes over. If the baseline changes, the rest of the story changes with it, because the consequence depends on whether those confirmed details keep holding. The most important baseline split is between what is already visible and what still needs confirmation from the next public signal. That scope keeps the segment focused on the mechanism that actually changes outcomes. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The structure matters because a hawkish policy stance can support the peso by making peso-denominated assets more attractive and encouraging capital inflows. That is the working engine behind BSP tightening bias, and it explains why the event cannot be read only as a surface move. In this case, the mechanism connects 6.5% benchmark with 2 to 4% target. When that connection weakens, the story becomes less about the initial number and more about whether the system, market, or policy process can absorb stress. That mechanism is the reason a viewer should watch process quality, not just the largest number in the story. The pressure reaches importers, exporters, overseas workers, and bond investors all feel the trade-off between currency support and growth pressure. For viewers, the useful question is who actually has to react: users, traders, issuers, regulators, operators, or institutions. Here, Philippine peso sits at the center of that reaction, while Bangko Sentral shapes the next practical step. The consequence is strongest where the event changes access, trust, liquidity, compliance planning, or the cost of making a decision. That makes the impact measurable through behavior, not through hype around the topic. What is not proven yet is the support could weaken if the Federal Reserve stays higher for longer, or if global growth hurts Philippine exports. That limit matters because the confirmed facts do not automatically prove the most aggressive interpretation. The safer split is to treat 3.2% PHP gain as established context, while leaving the unresolved part open until a stronger signal appears. That keeps the story useful without turning a partial data point into a conclusion. The open point should remain separate from the confirmed facts until a filing, market move, patch, data release, or official action closes the gap. If later evidence changes the read, the story should adjust around that evidence. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The move to track is the next signal is whether inflation stays inside target and whether the interest rate differential remains attractive. For BSP tightening bias, that is the point where the story either gains confirmation or stays stuck as an unresolved market, policy, security, or adoption question. The practical readout is to follow 2 to 4% target alongside the supporting details, remittance value, and 6.5% benchmark. If that next signal arrives, the story moves. If it does not, the only confirmed position is the one already visible in the evidence. The viewer should leave with one concrete checkpoint, not a prediction about where the market or policy process must go.